Chelsea RODSTROM is joining us, analyst at Global X ETFs. Chelsea, it's great to have you on the show. Your guys' team just released a really thorough report on China and the way the different funds kind of correlate to the U.S. So I want to get into that. But firstly, I just kind of want to get your thoughts on this broad subject as we get into the election. We've heard from a few of our guests here that we should expect China to become a big story and potentially volatile. Does that go into your guys' analysis at all right now?
Sure. So right now, the story is totally about the Chinese recovery and the outperformance, as you said, that we saw in China over the last quarter, but also throughout the year to date, China has really been showing a strong recovery from the COVID pandemic. And that's reflected in the sector dispersion of returns in China versus the U.S. Looking forward, there's likely to be volatility going into the election cycle. That's natural. China sectors is a great way to play that, particularly as China's been demonstrating a stronger recovery. We really like the consumer discretionary sector in China, particularly the e-commerce retail segment of that sector.
Now, the U.S. versus China on a sector basis, I'm glad you also point out just how well the economy has rebounded. The COVID curves are wild in terms of how good they are compared to the rest of the world. So I think that's an important backdrop to this. What do you see so far in the difference between China and the U.S.? Just looking at the return in the second quarter, obviously there are some pretty big differences here. Is that normal to see that type of dispersion?
So actually what we've seen more recently is a reversal in the trend of dispersion of returns in China. Typically in the U.S., dispersion of returns is much tighter than in China. That reversal has shown that returns in China have been tighter as the economy has started to shake out some of this the effects of COVID and has started to reboot its manufacturing sector and become more reliant and had a smoother transition to the e-commerce and online segments in the economy.
So then do we generally kind of think about China the same way we do the U.S., where the tech services and the tech dominance is so important, or is there still that economically centric kind of manufacturing role in China that changes their market? Is it as driven by the quarantine trades here in the U.S.? In the U.S., it's like as long as few big tech companies are going the right direction, the whole market gets dragged up too. Is that what happens in China?
So yes and no. There are obviously different factors in China. Like you said, retail trading in the U.S. has really started to pick up. That's also true in China, which has traditionally been a retail market. We've seen accounts swell in China to a larger degree than we've even seen in the U.S. But going back to your tech question, we see lots of different factors affecting that, including China's national strategies to promote its infotech sector. I think a lot of the headlines that we've been seeing focused around SMIC and even around the communication services industry with TikTok have really highlighted the importance of those sectors to China's national policies. And going forward, we're likely to see that ramp up even more as China looks to have its own domestic supply chains of semiconductor chips and replace its international exposure to, say, the U.S. markets.
It's always interesting to hear that as we kind of hear the same story here, right? We see that division, that kind of isolation potentially growing between those economies post-COVID. And just to reiterate the point about sector dispersion within China, because when we were on the downside in the market in the spring, generally correlations go up, things move together. But your point was that in China on the way back, there was a pretty big difference between the best sector and the worst sector. Now as that closes a little bit of the gap, does that potentially mean there's larger upside for the Chinese market overall? Or does that mean that the kind of early dominance from the strongest groups is fading? Again, to kind of compare to the U.S., I think here where when the tech trade comes together with the other stuff, it's almost like not as good. It's like when the other stuff outside tech starts performing, the market goes down. How does that work in China?
So in China, there are obviously different factors, some interrelated factors, just given its macro exposure to the global economy and to the U.S. particularly. But in China, we really see, the consumer discretionary as one that's been outperforming this year, whereas infotech has also been a leader in terms of outperformance both in China and relative to the U.S. But that can obviously shift. So whereas infotech is more of a potentially volatile sector going into the elections because of the scrutiny with U.S. policy, the consumer discretionary sector is one that really is expected to still continue to do well, has done well throughout the pandemic. And if we look at the e-commerce segment of that sector, for example, in the U.S., consumer discretionary has done great, right? Surprisingly, e-commerce has really led those gains. That's also true in China. In the U.S., if we consider e-commerce's growth as a percent of the entire retail segment, it's grown from about 11% this year to 15% because of COVID. That number is much higher in China, at about 37% of all retail being online through e-commerce. And it's expected to increase to about 64% of all e-commerce by 2023.
Chelsea, you guys have a lot of different funds, Global X, a lot of thematic funds, but I know you also have a whole suite of China sector funds. Are there particular factor thematic styles in terms of offerings for China, or is it mostly just kind of divided by sector in terms of your guys' offerings at Global X?
So we have both. We have 11 sector funds that are really aimed to be funds that allow investors to toggle their exposure to the Chinese economy, whether that's playing off trade tensions or playing off national policy promoting areas like biotech. So we have our 11 sector funds. We just launched last week a biotech innovation fund focused on China, as well as a large cap China fund. We also have lots of themes, as you said, that have heavy exposure to China. So whether you're looking to play sectors like you might in the U.S., or you're looking to get access to some of the emerging themes that affect the global economy, and you're looking to focus in on that growth from China, you can get that using many of our ETFs.
Chelsea, really good report and really helpful specifics here on the China market. Appreciate you joining us here on Morning Trade Live.
Thanks for having me.
Thanks a lot. Chelsea RODSTROM is an analyst at Global X ETFs. Go check out the report, free to read online. Really good stuff.